Hello, good morning, good afternoon, and good evening to everyone. And welcome to today's resource calling webinar on pricing trends and managing price risk for corporate renewable PPAs. So my name is Lucy Hunt, and it is my pleasure to be your host today. I'm the Renewable Power Lead at the World Business Council for Sustainable Development, or WBCSD, and we are a global organisation of over 200 businesses working together to accelerate the transition to a sustainable world. So I think we'll get started straight away. We have a lot of people in the webinar already, which is really great to see the level of interest. We had over 500, I think it was 560 odd attendees signing up. So really good to see how much interest there is in this. And I think what I'd like to do is just start off with a bit of an introduction to resource itself. So for anybody who doesn't know us yet, to talk about what we are and what resources we provide as well. So if you can move on to the next slide, you can see that we are the European Alliance of Corporate Buyers and Sellers of Renewable Power. We were founded by 4 organisations way back when in 2017, and we are guided by a steering committee of buyers and sellers who are leaders in the corporate renewable power procurement movement. And this webinar today, so we run a series of webinars and have many recorded webinars as well that we've done in the past, but really this one is targeted at an informed audience with an initial understanding of PPAs. So if you can move on to the next slide, you can see that Resource already has a wealth of resources available in its buyer's toolkit. So both if you're completely new to this and you don't even know what a PPA is, then please do go and have a look, because it really talks through what are the sustainability credentials, why should you be considering that option. You can also find resources like the template PPA contract, European Corporate Sourcing Directory, and plenty of other things as well. So a really good resource for both for those who are kind of new to this topic and also those who are already advanced and working in this space. And to give you a taster, if we move on to the next slide, you can see a bit of recent data that we published on the platform, which was really exciting. So we can really see how PPAs in Europe in particular are moving from strength to strength. So a recent achievement that we've noticed is that in Europe by May this year, we'd already surpassed the volume of PPAs signed during the whole of 2019. So really encouraging start to the year, and we're hoping to see that great growth continue for another record-breaking year in 2021 as well. And for that, we need all of you. So that's why it's great to see so many of you here. And then my last slide before we really get into the meat of the discussion is to talk about a report that we've launched today. And so that's really related, if we move on to the next slide, that's really related to the focus of today's session. So it's a new report on pricing structures for corporate renewable PPAs. And this report is really because we identified a gap in the market. So we saw that there was some kind of knowledge missing, particularly from the corporate buyer side, of what kind of structures were available, so pricing structures in particular for corporate buyers. And so we've kind of laid all of those out, talked a bit about their respective risk impacts as well, and regional variations and settlement considerations, all so that we can help companies to understand which options are feasible and which are most suitable for them as well. So to start thinking about what different approaches that they can take. So you can download it with the QR code if you want to and read it on your phone, or you can also I'm sure we can put the link in the chat so that you can all download that and see it in your own time. But that's all for me for the introduction for now. And so if we move on to the next slide, you can see the great lineup of expert speakers that we have on the line as well. So just to run through them all, and so you know kind of why we've selected this great lineup to talk about these particular issues that we've selected on pricing trends and managing price risk. First of all, we have Tekla von Bülow, who is Principal of Commissioned Projects at Aurora Energy Research. And Tekla is going to start us off with an introduction to renewable energy market dynamics and the concept of price cannibalization. Then we have Flemming Sorensen, Vice President of Europe at Level 10 Energy, who will be sharing some highlights from their recently published PPA price index for Europe. And so that will give us an overview of pricing trends for the first quarter of this year. Then we'll move to Phil Dominy, who's a Director of Power and Utilities at EY, who co-authored the new report with us. So has been putting a lot of time into understanding those different pricing structures, and will be able to give us some insights on how these market dynamics presented by Tekla and price trends presented by Flemming are influencing buyer preferences for PPA pricing structures. And then finally, we have Juan Riviere Abad, who is the head of Boost for Growth at Iberdrola, who will then deep dive a little bit more into the trends and outlook for Spain in particular, because in that market, we're seeing particularly interesting pricing and buyer preference trends due to growing renewable energy deployment. So I think just a couple of housekeeping things to end, and then I will hand over to Tekla to start your presentation. But this session is being recorded, and we will share a copy of the recording and the slides afterwards, so you don't need to worry about that. And we will, of course, be answering questions from the audience. So we'll try and pick some of those up throughout, but also we'll hold some time at the end. So do submit your questions in the Q&A box on the right-hand side as we go. Good. Now I will pass over to Tekla to start the presentation and to give us a bit of an introduction on renewable energy dynamics and the concept of price cannibalization. Thanks, Tekla.
Thanks a lot, Lucy. Hello, everyone. Yeah, thank you for having me. It's an absolute pleasure to be making a small contribution to this excellent panel. I have a couple of minutes to give you a short introduction about how we think around PPA pricing, the concept of price cannibalization, and what kind of effect that has on PPA pricing. So just if we move to the next slide, I'm not sure if everyone knows Aurora yet. We are an energy market modeling and consulting company. We've been in the market since 2013 and are fast growing. Our main office is in Oxford. We have a second big one in Berlin. We've been in Sydney for, I think, about 2 years now, and we are expanding to the United States, or have been expanding to the United States during this year. So it's a very exciting further expansion of Aurora. In kind of the core, what we do is forecasting the future developments of power markets. So we use kind of a fundamental market model to identify developments in different markets. So all the markets that are covered here in orange are the markets that we cover, and we do kind of further expand in further countries. So kind of the yellow ones, for instance, are the ones that we do analysis on, but are not yet in. I myself am a principal in the consulting business of Aurora. So what I do is I help clients on bespoke requests on top of the other business side of Aurora, which is a report and subscription business handling quarterly updates on power markets to our clients. I head up all our activities around PPAs, so I'm working both with developers and off-takers on PPA fair value pricing, helping on transactions, and also assessing kind of the potential and attractiveness of different European markets for PPAs, which is especially interesting more and more for the corporate off-takers that are coming into the market. So without further introduction, I'd like to jump to the next slide. So when we think about PPA pricing, so PPA is kind of a direct contract on green power, and is becoming a more and more important tool for decarbonization for a lot of corporates around the world. And the way you have to think around PPA pricing is basically you are in some form or another fixing your price over a specific tenor. So for a couple of years, there's an agreement between an off-taker and a supplier of a PPA, and there is kind of a fair value has to be found between the two parties. So the way we think about it at Aurora and many other participants in the market is that the first thing you have to look at is obviously how will the power prices develop, and what is kind of the value of the asset, the value of the energy of the asset. So when we go from left to right here, it's a very simplified waterfall. It looks very static, but obviously it takes into account the developments over different years. So when we start with the first bucket, which we call market expectation, we start off with the base load price, which is kind of the wholesale power price for the specific country that an asset is in. And then we subtract what we call kind of the asset profile. And this asset profile for renewable energies is subtracting a bit of value from the baseload price. And this is what the whole concept of price cannibalization is about. And I will explain how that comes about on the next slide. But to continue here in the waterfall first, so what we take into account beside the asset profile is the short-term balancing cost. So as kind of, you can see it as a service from the PPA supplier to the off-taker, and this is something that actually also in some cases a third party could take on, but from an off-taker perspective, this adds to the price of a PPA. So what we land at is in the middle, what we call the value of energy, and there's two additional components that we take into account. On the one hand, the guarantees of origin, so that's basically a certificate that you get when you buy a power within a PPA. And it's kind of a certificate that you have acquired that amount of green power, and this is a European traded market, and GOs are priced in as they have some value, so they are priced in the fair value of the contract. And the last component that we have here is what we call the cost of capital at risk. And basically that component is what makes it interesting, actually, is in simplified term, it's the value of the capital that is, or kind of, let's say, the volume of the capital if the PPA price or the wholesale price falls below the PPA price. So in a very easy term, if you have a fixed PPA price and the wholesale price falls below that fixed price, then in that sense, the off-taker is paying too much for the PPA, and that volume that is kind of below the PPA price is what we call the cost of capital at risk. So if it's a fixed price, the fixed price minus kind of our low curve is what we would then use to calculate the cost of capital at risk. And if it's a collar structure, for instance, it's the difference between kind of the floor and a low curve. So in the end, where we come to is kind of the fair value of the contract, and we can do that for averages for countries. Or what we can do also is to be very asset specific. So we would plug in kind of a production profile of a specific wind or solar asset, and that would yield kind of the fair value of the contract. Coming to the next slide, which kind of explains the whole concept of cannibalization. So what you see here, kind of on the example of Germany, but we can do that for all the other countries as well, is that you see here on the orange line our prediction on the baseload price. So for instance, for Germany, it's going up until the mid-40s due to rising commodity prices, but also carbon prices. And in Germany, we have a nuclear and a coal exit in the next coming years, driving up the prices. And then more and more renewables are coming in, which then need to fall in the power prices at the end of the 40s. And what you see with the other colors here, so the blue and the green lines, is what we call kind of the capture prices for the renewables. And you can see that they have a substantial discount on the baseload prices. So that is basically, if we think back at what we saw at the previous slide, that is kind of the bit baseload price minus the capture prices. And the reason why the baseload price is so much higher than the renewable capture prices is because the power prices are set by auction systems at every moment in time, and kind of the marginal plant, so the most expensive plant that is still online in the system, is price setting. And the renewable energies, since they have very low short marginal costs, are coming in right at the left kind of this so-called merit order. When they are producing, usually wind and solar assets are all producing at the same time. So if the sun is shining, all the solar assets will produce at the same time, and when the wind is blowing, then usually kind of all the wind assets in that area are also producing. So that leads kind of to much more supply suddenly in the system, kind of pushing out, if you want to, the most expensive marginal plant in the system, and enabling kind of the marginal plant to be cheaper, because the renewables are always kind of the cheapest, and pushing out the others. So that leads kind of to the discount. And you see there's a bit of difference between the discounts of onshore wind, offshore wind, and solar. So solar has the largest, what we call cannibalization of renewable energies, because there you have this biggest effect of when the sun is shining, then that all the other assets are producing. Whereas kind of offshore wind has the lowest cannibalization effect, because kind of the wind turbines are out in the sea and they're producing most of the hours. There's a lot of wind out in the sea, so here you have the lowest discount to the baseload power prices. So that's kind of in very simplified terms the effect of renewables cannibalization. And what you have to take into account if you do kind of a PPA fair value assessment is to also incorporate the risk of, for instance, more renewables coming into the system, like for instance a change of law where suddenly you simplify kind of the permitting of onshore wind, or you increase enormously the targets of offshore wind, then that will have more renewables coming into the system, and that will have an increasing effect on the cannibalization. And so when you do a fair value assessment, you have to take into account the risk that the capture prices might fall below what we are currently expecting. So coming to the next slide, just giving you a bit of a cross-country overview of what it means. So on the left side, you see for the different countries, the levels of baseload prices. They are different for the different countries based on their power mix, on their regulation, their general kind of market dynamics. And that is kind of the first indicator for how much a PPA price would already cost. But then you have to take into account how much discount there will be if we're talking about an offshore wind, an onshore wind, or a solar asset. So specifically, if you want to look, for instance, at Spain here in the middle, and in Spain, we have a lot of solar, a lot of further build out to be planned. And here we have a kind of a 37% discount of the solar prices with respect to the base load price by 2050. And what you see here is kind of also that the PPA prices for a solar asset on the right hand side is actually one of the lowest compared to other European solar PPAs. So when you look at the PPA price, you really have to look at what market where we are talking about, and also obviously what kind of technology we're talking about. It is going to vary a lot between what kind of asset we are looking at in the different countries, and Fleming will be telling us more from the levels, the 10 side, what they are seeing in the market. The last slide I brought is kind of a small addition actually that our Iberian team has made that I found was quite interesting. So in actual facts, the question is the fair value of the PPA actually the value that we see in the market? And you might know, and I think my other panelists will talk more about it. On the topic of Spain, there has been auctions that have been introduced in the last couple of months, which were not there before. And so the new regulation has led actually to a cannibalization in a way also in terms of supply for PPAs, because assets that were previously would have gone for a PPA could now go into the auctions. And what we quite interestingly see is that we expect kind of the PPA prices for Spain to become closer to an actual fair value of the contract, since it was oversupplied beforehand, and so the prices might have been lower than what we would have seen as a fair value of the contract. So it's kind of a little addition I brought in. I thought it was really interesting analysis, and with that, I'll hand it over to my next panelist. Thanks a lot.
Thanks very much, Sarah. And just to say quickly, yeah, I think it's great that you're bringing up the example of Spain already. I think this is going to be quite a strong theme throughout, and particularly this impact of the auctions, which I hope that Juan indeed will be able to comment on later. So thank you for that introduction and kind of setting the scene for us. And now I'd like to hand over to Flemming, who is going to go into a little bit more detail on the pricing trends observed in Europe over the last few months. So over to you, Flemming. Thank you.
Thank you very much, Lucy and Tekla, and yeah, thanks for inviting Level 10 to the stage. I'm glad there's so much interest in Spain. I like Spain. I moved to Spain about a year ago to take up the very exciting opportunity of bringing Level 10's PPA marketplace to the European PPA market, and having been both a buyer of renewable electricity and a seller of renewable electricity, it's great to now be in the middle. And who's Level 10 and what do they do? I'm afraid we're not yet quite a household name, although we'd like to be. But let me just give you a very quick intro as to who we are and what we do. Level 10 was founded back in 2016 by former developers. The aim of the company was to make the PPA transaction smoother, less risky, and more efficient for everybody involved. We've turned that into, over the years, a desire and an objective to become transaction infrastructure for the renewable energy industry. So whereas we were built for buyers to help them navigate this market more safely and quicker, and achieve better outcomes, we now really want to cater to anybody that's active in this space, and we certainly consider our developer partners equally, let's say, equal customers as we think of our buyers in general. But the advanced analytics and the procurement tools that we built were actually, in fact, built for the buyer community. Next slide, please. So we've developed a product that we call the PPA marketplace, or the energy marketplace, where we ask developers to upload data and also price for the projects that are seeking PPA offtake. We currently have 470 some developers that have chosen to use our tool for this. All of those projects and price offers are then sort of presented to the buyer community which we serve, which consists of buyers directly, corporations or energy companies. But we also work with a bunch of advisors that have access to use our tools as they service their companies or their clients. One of the things that we use the PPA price that developers upload for is to be able to produce, let's say, a statistical view of where prices are moving over time. We do that in our PPA price index report that we publish quarterly, both in North America and in Europe. And obviously, we haven't done it as long in Europe as we have in the US, because we've only been here for around a year. But we are certainly going to stay for the long time, and this will give you an opportunity to look at some of the conclusions from the report that we published here in Q1. Our price index report is available on our website, free to download, and I encourage you to do so. And the one we'll take a closer look at today was published in April, so Q1 results, and there's been a lot of interesting things going on, so I also encourage you to keep an eye out for our Q2 report, which will come out in July. Next slide, please. Before we dive into the report, there are a couple of things I just want to point out. The price information that you will see that we use in our reports, as mentioned, they're based on offers that developers have uploaded to Level 10's marketplace. It's a price at which they're willing to sell a PPA based on some certain some standard terms and conditions that Level 10 has set for all the prices that are uploaded to the marketplace, which make us able to compare them on an apples to apples basis and to be used comfortably for reporting such as this one. The second point I want to make is that the prices you will see are what we call P25 prices, which means it's the lowest 25th percentile price. It's not necessarily the lowest price, so it's not the lowest price that you will find on the marketplace, but it's sort of the bottom 25% of prices that are talked about in this report. And I think the last thing I'll mention is that these are, and keep this in mind, these are not executed prices. They are, of course, confidential. Okay, next slide. Let's see if we can dive into the material. It won't take long because it was actually quite a boring quarter, as you can see. Not a whole lot of price movements in European solar prices between Q4 and Q1 of 2021. Swedish prices fell and Spanish prices fell as well. And we'll maybe come back and talk a little bit more about auction effect and stuff like that at a later time. I won't dive too much into that. And we also had an even smaller drop in German solar prices. It is interesting when you look at the graph to see how Scandinavia compares with Spain for the overall, let's say, price lead. And when it comes to solar, if you consider sort of the difference in resource availability. Of the total offers that were listed on the Level 10 marketplace in Q1, almost a third of them came from Italy. The Italian price has been flat, but nonetheless, that's where we have actually the most solar offers on our marketplace. Second was Spain with roughly 25% of all solar offers. And then we have UK and Germany coming in on third and fourth place respectively. Next and last slide, please. Thank you. In terms of wind, again, very, very stable outlook in this quarter. Not a lot of interesting things going on. UK actually rose by 4%. I think that's probably the most dramatic increase that we have in the quarter. But I will note that wind prices in Spain, wind offers in Spain have dropped, not this quarter, but in the past 2 quarters. So also sort of a declining trend that we have seen both for solar and wind in Spain. So this is what sort of happened in Q1. Not a lot of excitement. I am very excited about what's going to happen in Q2, provided that wholesale markets have done some very interesting things in several markets across Europe during this quarter. So do look forward to see the impact on that from this current quarter. Level 10 has run a few procurements, and we are running a few procurements at the moment, and there's interesting stuff in there that we can't talk too much about. And I'm certainly not one with confidence enough to try and predict what the future will hold. But if I were to make an attempt, I do think that we will see Spanish PPA offers decline further in Q2. So with that, I think I'll pass it back to Lucy, and once again, stay tuned for our Q2 price report in the beginning of July. Thank you.
Great, thanks very much, Flemming. Well, yes, I mean, stability is the key word that I'm hearing coming out of that, and that's not necessarily something that we could have said last year, so there's also something to be said for a stable quarter as well. But indeed, we will keep an eye out for your new study coming out as well, and we'll make sure that we post it through our resource channels so that everybody can access that too. So yeah, thank you very much for that overview. Now we've had kind of a good grounding in market dynamics from Tekla and then some PPA pricing data from Fleming. I'd like to bring in Phil from EY for a discussion on really how those different elements are influencing trends in buyer preferences. Hi, Phil. How are you doing?
Hi, Lucy. Good, thanks. Excellent.
Hi. Good, good. So yeah, I mean, in the report that we published today, which of course was co-authored by yourselves, we can of course see that there's been, or there is indeed now, a wide variety of pricing structures available for both virtual and physical PPAs. So we have fixed, escalated, indexed, floating, discount market, floor, collar, numerous hybrid pricing structures as well. So lots of different options there. And so what I really wanted to pose to you first was to understand if you've seen any particular trends in the past months and years that are particularly worth highlighting.
Indeed, yes, thank you, Lucy. Yes, definitely some clear trends, but also there's some strong consistency, to be honest. I think with large corporates, they're a bit like supertankers sometimes, you know, changes come a bit slower than for smaller companies or individuals. But yeah, there are also some criteria that are varying. But if we stick with some of the sort of consistencies that we're still seeing in the market, I mean, I think most corporates are still wanting additionality. They're mostly looking at new sort of greenfield projects, mostly looking at wind, mostly onshore, maybe some of the larger ones offshore, and then obviously solar PV. Most are still looking at majority offtake, wanting again to have a sort of material contribution to projects. Mostly looking for fixed price, and mostly looking long term, although that's not necessarily their want, it's more that's what developers and investors need, you know, at least a 10-15 year sort of price horizon. So there's a lot of consistency in what corporates want. I think where we are seeing some clear trends in buyer preferences, although not directly price trends in this instance, but virtual structures are growing in Europe. Obviously, physical or sleeved PPA structures were sort of dominant for a number of years in Europe and elsewhere. But the sort of growth of virtual PPAs, I think, sort of particularly due to sort of cross-border structures that are much easier to do in a virtual structure, we're seeing that come through very strongly. I mean, some of the markets today, we've been talking about Spain, a very popular sort of hub for cross-border PPAs. We're doing PPAs there, cross-border PPAs there. We're doing PPAs in Ireland, Italy, Nordics, all cross-border PPAs. So that's clearly a sort of a big trend. I think we're also seeing some trends around some indexation of PPA prices. So in some markets, sort of indexing a PPA price to, say, consumer price index or retail price index has been quite common in the past, and particularly the recent past, actually last year, with the very low prices in sort of Q1, Q2 with the COVID pandemic and the drop in demand, that led to a lot of sort of PPA prices being struck low, but with indexation sort of lifting them with time, or some sort of steady escalation process. But it's interesting how quick things change, you know, and you know, most PPAs now are completely flat in nominal terms, no indexation, and that reflects the fact that, you know, market prices, wholesale prices in Europe and even further afield have a much more sort of positive than they were. I think we are seeing some other sort of trends in seeing a few more variants. I mean, floating price sort of corporate PPAs are generally pretty rare. The sort of discount to market structure that you can see in our report, typically with a floor, sometimes with a ceiling as well, known as a collar. We're seeing those, but yeah, still pretty rare. But we would expect that if prices started to decline again, that's more of a sort of a preferred structure, because it would reflect a falling price and doesn't leave the PPA price really high and stranded. So we are seeing also other sort of hybrid PPA structures, so a sort of a combination of fixed and floating structures, you know, either by volume proportion or over time. And then some of the really sort of unusual structures, beginning to see a few of those, but again, still very rare. the sort of reverse collar structure, which is basically, you'll see it in the report, it doesn't settle outside of the floor and collar and floor and cap bands, so it sort of benefits corporates who are very worried about very low prices, so falling below the floor. But obviously that's not attractive to a developer who needs to sort of finance off a floor. And then you get collar structures which settle outside of those bounds but not within. So a little bit of detail there, but you'll be able to see that in the report. So, but just to sum up, Lucy, yeah, so there are some variants coming and some clear trends, but I think there's also some very consistent sort of requirements from corporates that are still very much in the market.
Great, thank you, Phil. And maybe on that comment on volume as well, so the different volume structures that are available, because I know we had many conversations about this when we were drafting the report as to how far to go into that, because for everybody else to know, there's a very good resource already available that was published a couple of years ago by Resource on looking at those different volume structures that you can select and then what impact that would have on risk. But of course, the two are inextricably linked. So do you have maybe a couple of comments that you can add there as well? So.
Yes, and again, Lucy, it sort of stems a bit back to early last year when we got a bit of a sort of vision of the future in terms of a lot of renewable supply and demand sort of being outstripped by supply. And we saw obviously that the lower prices I've already mentioned, but we also saw in effect the sort of early signs of what a cannibalized market could look like, you know, particularly in the sort of solar space. And I think sort of that I mean, developers were well aware of it already, but I think off-takers particularly became more aware of what we call profile or shape risk, where basically your demand shape is sort of becomes disconnected to the supply shape, and particularly when supply is high and prices are low, if you're on a virtual PPA, then you'll be topping up, you know, the generator quite considerably from low prices up to the strike price. So that was very much, people became much more aware of that risk. And I think certainly I've seen that the PPAs I've been doing within the last year, many of the corporates are now wanting to go either fully to baseload or firm PPAs, which are typically on a sort of what we call a notional or forecast structure, so say fixed volume for a month. And obviously that gives them a very steady profile in terms of their what's being settled through the PPA. Obviously, it leads to complications for the developer because, you know, they're now needing to either hedge or trade the power to enable delivery of that shape, which is obviously different to the generation shape. So I would certainly say pay as produced is the sort of preferred sort of vanilla option for a developer, but it certainly leaves corporates potentially exposed to future cannibalization risk. And I think corporates are willing to pay a price premium. You know, they understand that, you know, to get that sort of stability and to pass that risk back to the developer, you know, does cost, and they understand to match that supply and demand, they need to pay a premium. I think they also want to mitigate, you know, future cannibalization risk potentially. So, you know, they're willing to look at these structures more. I think one of the complications is that some people view sort of pay as produced as the purest PPA, as it were, because it's just the power from the generating plant. Once you start sort of profiling it to a structure, you're inevitably sort of blending in effect sort of or depending on power from other sources, potentially, you know, fossil fuel sources. So but yeah, I think we'll come back potentially later to pay as produced and baseload, but that's certainly a trend we've been seeing in the past year of a move away from just pure pay as produced.
Yeah, understood. Well, thanks very much, Phil. Good summary. There's lots of different moving parts in Europe at the moment, so it's nice to have kind of an overarching sense of what the kind of trends are that are going on at the moment. Of Europe more broadly. And then I think it'd be nice now to bring in Juan to join this discussion. So feel free to stay as well. but to kind of look in a little bit more detail at the Spanish market. So obviously we've had some comments on it already, but in particular, as this is a market that's been identified with that cannibalization price risk coming up more regularly, what kind of trends have you seen? How is that impacting buyer preferences? Maybe also some general comments that you could make on the impact of auctions as well as and that dynamic. So yeah, if you could share your thoughts. Thanks.
Okay, thank you very much, Lucy, and also thank you very much, Resource, for inviting me to this webinar. Well, I have to say that, I mean, unfortunately, as a developer, there has been quite some pressure on PPA prices lately in Spain. I think it's a combination of effects here. You know, obviously, having all the developers wanting to enter the Spanish market is one reason. As you know, the Spanish market is really booming, especially the new very big developers that are coming from other energy parts that are trying to enter the electrification side of the energy. That's really having some impact. Of course, one of the reasons why they will want to enter in Spain is because of the resources. So we have lots of sun. We have also wind, and we have something that is quite difficult in Europe usually, which is land availability here in Spain. So it means that everybody just wants to enter Spain here. Also, I mean, the last year's prices depressed by the COVID effects. I mean, I think Phil has really mentioned that before. Didn't help in sustaining healthy PPA prices. It has bring some pressure, which is has been some pressure. And this has happened because I know Tecla says that the fair price is linked to wholesale prices. As a developer, I like to think about PPA prices linked more to LCOEs, to the cost of development of the assets, which is much less volatile than market prices. But still, when you see prices goes down in the wholesale markets, there's a pressure on PPA prices. And when the prices goes up, like today, well, there's less pressure to go up in the PPAs, unfortunately. But anyhow, it seems that we see, I think the wholesale prices affects much more on expectations from our customers to sign PPAs. So what are the expectation of prices they can sell? But anyhow, another thing it's also which is putting some stress on the incomes of solar installation, especially in Spain, through PPAs, is the fact that solar stations have the bad habit to produce always together, as Tecla was saying that. So they produce when there's sun, and especially in Spain, when there is sun, there's usually sun everywhere. So it means that they cannibalize the price pretty strongly. So they're very, very sensitive to solar deployment in Spain. And although we are a bit delayed, so we only have, like, I don't know now, I think 8 gigawatts of solar in Spain, but I mean the deployment is really huge in Spain right now. So we think we're gonna see some cannibalization, so strong cannibalization. Wait, the 37% discount that Tecla showed is not today, is in 2050. So please, let's not be so too much alarmed yet. But anyhow, we're seeing something that, I mean, I'm sure that everybody knows, which is the dog curve, which is something that was popularized by California, seeing where the big solar deployment there, and we saw the dog curve in the daily prices, very low when there was sun and peaking on the afternoon when the sun was going out. And we've seen that in some weekends in Spain. This was very surprising because, you know, in Spain for the moment, because of the low development of solar still, basically the solar almost saw more value than the baseload. This is changing quite quickly. And seeing the dog curve here in Spain, sort of a shock, even if it was in the weekends due to low demand and very lot of sun. But anyhow, what I would say is that, I mean, prices are low, and I would say that are too low for us developers to be really happy, let's say.
Thanks, Juan. Yeah, understood. And I think that's it's an interesting angle. And this is why I was very happy that we managed to get such a diversity of speakers here today, because people are coming at this from different angles, and it's important to understand all of those different perspectives. Throughout as well, the resource and WBCSD reports, we've always tried to quite concretely be able to say that. So what is the buyer perspective, what's the developer perspective, and what's the investor one? So you can really understand how those different points are feeding in together. I'd like to bring Tekla and Flemming back into the discussion now as well, and to just maybe comment on a couple of themes. And there are some questions which are aligning quite nicely with some particular themes that I've pulled out as well. But firstly, on this price cannibalization point, so if we are already seeing this in some markets, we're expecting it to increase, and also to begin in other markets as well as the proportion of renewables on the grid grows. There's a question here of what kind of mitigation approaches can buyers take to alleviate this risk, and I think we've touched upon it already with some of the pricing structures, but maybe Phil and Tekla at first thought could provide some comments on on some mitigation approaches that buyers can consider. Do you want to start?
Yeah, I've got a couple of ideas, and I'm not sure, can't remember what the other ones from Tekla were going to be. In case we overlap, apologies, Tekla. But yeah, I mean, I think that there were sort of two areas that I've sort of seen, and we've already touched on. You know, obviously corporates are moving towards baseload structures, although some do feel uncomfortable about moving to a fully forecast notional structure. So one of the sort of alternative hybrid structures that we're now seeing sort of gaining traction in the market is a settlement, so virtual PPA. This is on the day ahead market, average pricing. So total volume produced over the day from the plant settled against the day ahead. So that's the arithmetic average of each of the hours, so not hourly. So it takes away some of the exposure to specific hourly profile risk, which is obviously particularly prevalent for solar. So that's one sort of hybrid pay as produced structure that we're seeing. I think the other one is this big sort of 24/7 PPA structures that we're seeing some of the very large corporates look at. So trying to match sort of supply and demand, but not from one PPA, but from multiple PPAs, you know, potentially even from other sort of renewable sources such as hydro and biomass. So, but I think that they're going to be quite in the minority, simply because you really need a very big load to really be able to justify and make viable, you know, multiple PPAs. So, but that is one way, you know, corporates are looking at sort of trying to mitigate their sort of exposure to price cannibalization. But yeah, I think that.
Yeah, thanks. No, I mean, I fully agree with you. There's, in my perspective, the whole PPA topic is still very much dominated from an off-taker perspective from kind of the big corporates. And the reality is a lot of them have kind of big in-house trading departments and or commodities team. So what I do see as approaches is to have kind of a whole kind of hedging portfolio when it comes to the whole topic of PPAs. If we also look at the different more innovative structures that arise, and you can actually see it quite well in the report of EY. What I do see is kind of what I call tranching. I think Phil calls it also a hybrid structure. As tranching in especially long-term tenors. So there's a lot of corporates that are looking for big volumes, offshore wind, and big volumes, especially when we're talking about kind of the zero bid auctioned volumes, where kind of from a developer side, you need to fix a PPA for a long tenor in order to make your project bankable. But from an off-taker perspective, it's really difficult to kind of commit to a fixed price, let's say, for 15 years. So what you have is kind of PPAs that are structured in different tranches, where you start off with a more fixed price solution, and then it becomes more merchant as you go along. So that's kind of one of the big trends that I'm seeing. Elsewise, there's always the possibility also, if you're, for instance, an energy intense company and you do have kind of own so a big chunk of also scope 1 emissions, if you're procuring your own gas, And there's also a possibility to hedge kind of your PPA against the gas prices. But that again requires a big knowledge capability within the company. For kind of companies that don't have that are not that familiar with commodity prices, usually hand over a lot of the responsibility, the balancing and the auxiliary services to the utility that is kind of handling everything, but also obviously that comes to a price also when we're talking about baseload PPAs. The residual power that comes on top of the S produced profile is always more expensive. So I see a huge variance really depending on what kind of off-takers we're talking to. But as the market gets more and more liquid, more of these more innovative, let's put it that way, kind of structures arise, which is really, really interesting to see.
Yeah, absolutely agreed. Thanks very much, Tekla. And to bring in Juan and Fleming then as well on maybe a slightly different point, so looking at it from a different perspective, so rather than the buyer side. But we've mentioned a couple of times this dynamic between corporate PPA pricing and the impact of government auctions and kind of within the context of Spain as well. Maybe any other comments or detail you'd like to add there on the dynamic between the two?
Okay, I'm happy to jump in. I mean, I would say like auction results do impact mainly customers' expectation. Say mainly. I said before, when a developer is setting the price, they're trying to set it on the LCOE, so their own LCOE doesn't depend on the auction price. It's going to be something different, but it does have an impact on what the customer just want to see on their PPA in front of them. It's sometimes very hard to explain to a customer why this is different. Of course, these pure generated from the auction to the a lot of the time base load is when auctions draws every single developer there. It's just an easy way to enter them in the markets. I mean, to sign a PPA means to have in place some structure to be able to work with it or to contract somebody else outside. And in some cases, it has taken us 6 months to close a PPA with a customer. Sometimes it's quicker, sometimes it's slower, but entering through auctions is very different. And you can have, especially we can see even big customers that are willing to, big new developers that want to enter the scene and have a lot of publicity also. Wants to be shown and seen by everybody as entering the renewables market is also like a playing ground perfect for them. So there's a lot of differences that might drive those differences in prices. But it's true that it's very difficult to explain that to some customers. Please.
Yeah, no, I think that's probably true. I believe if auctions are structured well, they are meant to drive down costs for the one issuing the auction. That's sort of the whole point. And I do think that we're gonna see that happening. It's taking place basically everywhere where they've moved from an FIT system to a CFD scheme that has helped drive down cost, and I think it's gonna continue. The former situation, and now I'm not a developer, but I think there used to be sort of a golden ticket type of label on once you get in an auction, and I'm not sure that's going to continue, right? I think there should be building a different expectation in terms of what the price actually will be, and also how the risk allocation inside the scheme is going to behave. So I think that might be. I think there's plenty of opportunities for auctions to coexist with the private or the voluntary market, and I think Spain actually is a good example of that, where you have an enormous pipeline of projects, and the corporate PPA offtake is the pipeline can satisfy easily both the corporate market, but also the even rather sizable Spanish auctions in my view. So yeah, I think they should be able to coexist quite nicely.
Excellent, thank you very much. And I'm seeing plenty of questions coming through as well. So some of them we've kind of answered naturally as we've gone through, which is great. But do keep sending them because we will collect them up afterwards and see if we can share some additional answers too. But I have a clarification question coming here on the Aurora presentation. So for you, Tekla, which is just, I think would help everybody to make sure that they're on the same page. So it's a clarification on, should we understand that as renewable capture prices decrease, PPA prices should decrease? While on the other hand, in some markets, demand is a lot higher than supply, thus should drive prices to increase.
So yeah, there's different mechanisms coming in. So first of all, kind of on the PPA prices, depending on the capture prices, so we're talking, for instance, in the case of Germany, kind of the curve dipping at the end of the 40s, and that obviously is still quite far away, right? So if we're talking about tenors of 5 to 10 years, currently we have to take into account kind of still a rising curve. It really depends on what country we're looking at, especially kind of in Spain, where the curve falls much quicker than in Germany. So that's really depending on kind of the tenor that and the technology that we're looking at. And sorry, the second part was on the Lucy?
Yeah, sorry, I've just lost the question. Let me find it again. So should we understand that renewable capture prices decrease, PPA should decrease, while on the other hand, in some markets, demand is a lot higher than supply and thus should drive prices to increase?
Right, yes, so that's a really interesting part. So in our forecast, most of the markets will be undersupplied. There's a huge interest from corporates coming in, especially also via utility demand, as well as kind of the demand for electrolyzers that is coming in more and more, where you have very high criteria in terms of kind of green power quality. But again, it really depends on what kind of country we're looking for, and again, it depends on, for instance, on the regulation on the GOOs. So, for instance, in Germany, it's a market where to get a GOO, you actually have to go via an unsubsidized asset, because you don't get GOOs for subsidized assets. So that kind of the market to get a GOO in Germany is much smaller, whereas, for instance, in the Netherlands, you can have GOOs for subsidized assets as well, so you can kind of combine PPAs with a subsidized asset as well, so that kind of the supply will be more relaxed in terms of kind of the demand. But indeed, what we see is kind of that if it's a seller or a buyer's market, that will have a deviating effect on kind of the fair value of the contract. So if it's kind of classic economics, if a market is massively oversupplied, you can expect kind of that the prices would be lower than the fair value, whereas if it's more equalized, it will be more on the fair value level, whereas if the demand is much higher, then you can expect that there's a higher price on as a top on the fair value. And actually, we're currently doing an analysis also on the forecast for the GOO prices, and to see if kind of there will be a lot of development in the GOO prices, which so far there haven't been, to see whether there is a willingness to pay for green power by the corporates, which we so far don't really see. So everyone wants green power, but very little people want to pay on top for getting this green power, which obviously in the case of Juan's business makes it quite difficult.
Yeah, agreed. I just leave it open for anybody else to add a comment to that if they would like to. All happy? Good. Well, in that case, I mean, I do see that we're actually approaching the end. We have got a few more questions coming in, but as I said, we will see if we can kind of take those offline and circulate them, particularly to the particular people who have asked them. And I mean, we've tried to kind of fit a lot of different concepts into a small amount of time. So there's definitely scope for us to keep talking about this and deep dive particular topics. So if people do have suggestions for future webinars, if something sparks something, then do let us know, because we'd be happy to set a new topic webinar up as well. But just to make sure we have enough time just to have a bit of a final takeaway from each of the panelists, and maybe keep this broad so we can have a nice diversity of comments. But we've talked quite a bit about what's happened in the past and what's happening now. And so can we just have one final thought from each of you on the outlook of PPA pricing for the remainder of this year? You are open to interpret that in any way that you like. Let's start with Phil.
Thanks, Lucy. I think it's going to be quite fairly flat, actually. I think there's this tension, which you've already heard, between the higher market price we've got at the moment and then lowering levelized cost of energy. And I think it's tussle between the two, and I wouldn't like to go one way or the other, particularly with a variety of countries in Europe. So I'll go down the middle. I think it's going to be fairly static for the rest of this year. Longer term, it's a different story. Eventually, prices will decrease quite significantly due to cannibalization, but for this year, steady.
Great, thank you, Phil. Juan?
Well, I don't know to say what I think or what I hope. I mean, I hope that it's going to be a bit up. I mean, there are some reasons here. I mean, besides what I want, well, wholesale price have gone up quite dramatically, so the perception from customers may change a bit, at least in the short term. But also, we've seen an increase in LCOE prices from installations. So solar prices, for the first time in years, have gone up of panels, and this is putting some pressure on developers. And as I said before, I mean, LCOEs are just a red line for developers. So if this goes up, the floor price that we need to take the investment decision is going to go a bit up there. And who knows, maybe someone wants some offshore instead of solar, and maybe it's a bit more expensive also. I don't know.
Understood. Yeah, that's an interesting angle. Tekla?
Yeah, interesting question. I mean, the key takeaway is, again, it depends on what kind of PPA we're talking about. If we're talking about now really short tenor PPAs, we do see kind of quite a significant increase in carbon prices, which is dragging up kind of short-term baseload prices. So there might be some potential for actually these short-term PPAs to increase. If we're talking about longer tenors, there will be very little effect on the PPA pricing from my perspective.
Thanks, Tekla and Fleming.
Yeah, thanks. I'll go ahead and stick my neck out, and I've already done so, sort of, and predict that prices in the second half of the year will decline. The reason for that is I do think that we're still in, at least in the majority of markets, a buyer's market when it comes to corporate PPAs. The number of off-takers against, competing for, that developers are competing for is still a relatively small number, even though it is increasing, as visible through your first slide, Lucy. I do think that that's going to have an impact in the short term. That's going to be beneficial for the buyer. So downward-looking prices.
Understood. Well, I got what I was hoping for, a bit of diversity of response. I'll let everybody else ponder on what they agree with and what not, and we'll see what happens for the rest of the year. But yeah, I see we're a couple of minutes over time, so really all that remains for me to say is thank you so much to our 4 expert speakers today. So we have Tekla von Bülow from Aurora, Fleming Sorensen from Level 10, Phil Dominy from EY, and Juan Riviere-Abad from Iberdrola. So really thank you to you for taking the time to present your thoughts, and I'm sure we'll have some follow-up questions too. And thank you to all for listening in. Thanks for your active participation. It's been a pleasure to talk to you. I really hope you enjoyed the discussion as much as I did. So I wish you all a good day and hopefully speak soon. Thanks a lot. Bye for now.
Thanks, Lucy. Thanks, everybody.
Bye.